Thank you for tuning in to January 2025 Director's Cut. We have Department of Mineral Resources Director Nathan Anderson, who will share November 2024 production numbers.
Good morning and welcome to the January 2025 Director's Cut. Thank you to everyone that is joining both online and in person. I have been in my new role for 4 months. One of my goals when I started was to connect with the team and personally meet everyone and have meaningful conversations with them. And I want to report that I am within a couple employees of completing that. I want to thank the team at the DMR for their continued focus on the agency, each other, the safety of themselves and those they work around, and their passion for what they do for the state of North Dakota. I would also like to thank the numerous other agencies and employees that collaborate closely with the team at the DMR. Thank you for all the great teamwork, and with that, we will dig into the numbers. Oil production numbers, noting that these are November 2024 numbers. November had a total oil production in the state of 36,632,000 barrels, or an average of 1.221 million barrels per day. It's important to note that November is a 30-day month. October had 36,500,000 barrels for the month and 1.178 million barrels per day. That's a 43,000 barrel per day rebound or increase from the month of October to November. Moving on to crude oil price, the November WTI price is right at $70 a barrel. The North Dakota market is at $63.60, which is 9.1% below revenue forecast. I'll note that the North Dakota light sweet price is not included in the document. The source is no longer available, and the team at the DMR is looking for a good alternative for that data. Gas production and gas capture numbers for November are just under 104 BCF per month and 3.5 BCF per day, 95% gas capture. Wells permitted in the month of December was 87, and in November it was 78, so up slightly from November, close to the target of 100. Moving on to the rig count, the month of December had a rig count of 36, and today there stands a rig count of 31. I will speak to the rig count in a few minutes. Other relevant rig counts per the Baker Hughes report: the United States rig count is at 584, the state of Texas at 282, and New Mexico at 103. The combined Texas and New Mexico side of the Permian Basin is 304 rigs, which is 52% of the rigs in the United States. Wells waiting on completion for the month of November went down slightly from 331 in October to 301 in November. The inactive wells in the state is right around 2,000. The number of completed wells for the month of December is at 89, down slightly from November. Holiday and year-end impacts are the likely reason that that's down slightly. The producing well count in the state is at 19,334, and it continues to rise as expected. Switching over to the IIJA grant, we'll note that a total of 73 wells were P&A'd under that initial grant, and this is updated from the prior month. Last month's Director's Cut, 111 sites have been reclaimed. It's important to note that this grant is nearing the finish line. The team is looking into the formula grant that is currently out there. Moving on to Fort Berthold reservation activity, the oil production on a per-day basis is at 172,554 barrels. There's 2 drilling rigs active on the reservation currently. There's just under 3,000 active wells, 2 wells waiting on completion, and roughly 135 drilling permits in hand. Some comments: mergers and acquisitions continue to occur, and it is expected that these integrations of these companies occur over the coming year. There's currently 14 active frac crews in the state. Operators continue to maintain a permit inventory of approximately 12 months, while the DMR permitting timing remains steady at around 40 days. DMR continues to see longer and longer lateral permit applications, trending from 2-mile laterals to the 3- and 4-mile laterals. Gas capture details are in the table below, but remain strong throughout the state at 95%. There's fluctuations throughout the field as seen in the table below. Moving on to a couple graphs that I have. This first graph takes a look at year-over-year production. It's the daily average of oil and gas production in the state from 2021 through 2024. The green bars are the oil production daily averages for the year. And you'll note that the average production for 2024 and 2023 are almost identical at just under 1.2 million barrels per day. The red bars are gas production, and they are continuing to rise slowly. And the 2024 estimate is roughly 3.4 BCF per day. It's important to note that the 2024 estimate is 10 months of actual and 2 months of forecast. The black line in the middle of the graph is the gas capture, and as mentioned, that remains strong at 95%. Also to note, 97% of the production in North Dakota comes from the Bakken Three Forks pools. Moving on to the next chart, these are North Dakota monthly spuds and completions. You'll see that the well spuds are blue, the wells completed are in green, and the oil price is in the black dotted line. Two specific time frames that I'd like to focus your attention on, and that's the time frame from 2016 to 2020, where activity and price are relatively aligned. And then post-COVID, 2020 through 2024, where activity and price are disconnected, where investor expectations shifted to shareholder returns in 2020 post-COVID, and that holds true today. I'll also focus your attention on 2023 and 2024 pricing, where prices have remained steady between $60 and $80 per barrel, along with the activity level. So in summary, what I expect to see for 2025 is the rig count and number of frac crews to remain steady year over year with expected month-to-month fluctuations. I expect production to remain relatively steady for 2025. I also expect the price of oil to be steady for the near term, but acknowledge there is a new administration coming into office, and geopolitical items across the globe can be impactful to pricing. As you saw, the rig count decreased slightly to start the year. A potential reason for this are impacts related to the numerous mergers throughout the basin and those operators looking for capital efficiency gains. As discussed over the last couple months, there is a trend to longer laterals. The team at the DMR is assembling data related to total lateral footage drilled and completed. This data will be important to know as the trend continues. Some preliminary data indicates the total drilled and completed footage is increasing year over year. I expect this data to be available in the coming months. That concludes my report, and I will turn it over to Justin Kringstad for his update.
There's one question from she is asking, there's a BLM Montana Dakota's lease sale next week, offers 13 parcels and 1,324 acres. Is that sufficient acreage, or would you like to see more? Do you think this will change under the Trump administration?
I believe that 13 parcels is good, but I do believe it's still a long ways from what's really desired, which is much more. There's been a lot that's gone on with this in the last month. There was a substantial amount of leases that were canceled, so the backlog appears to have gone away, in which case they really just start the time frame over for operators that have to start the whole lease process again. So yeah.
There's been some talk in the news about Canada potentially doing retaliatory tariffs if Trump is to put tariffs on them. Just in general, how do you think that might impact energy? I know if we import some oil from them, how would that maybe even impact drilling in North Dakota?
I've not heard of that actually, so I can't really speak intelligently about that. I'll take a look into that, but yeah, interesting. I know that there's the likelihood of tariffs and sanctions that go on with the new administration, but I'm not sure about Canada. I've actually not heard that.
What about just sort of more broadly? How might
more
that
broadly? I would expect sanctions to go on countries like Iran, maybe Venezuela. Iran produces 2 million barrels a day. Venezuela, I think, produces just under 1 million barrels a day. But I don't think the administration would do that without having a plan to balance production, right around that 102 million barrels used globally every day. My opinion is that Saudi could increase production prior to that happening. So I don't expect the administration to really upset that balance without having a plan in place. Keep in mind that the Strategic Petroleum Reserve was drawn down during the last administration, and there's definitely room to continue putting into that as well to help keep that balance. I've recently reported at the legislature that there's a lot of levers that the current administration has to balance out production, probably more than any incoming administration that I've seen in a long time. So I would expect the balance to continue, pricing to be steady short term. North Dakota rig count to probably remain right where it is now. There might be some. I do know of a couple operators that plan to pick up a rig later this year, but I think the trend that we're seeing, if the data holds true that we've seen preliminarily, is that longer and longer laterals are adding efficiency gains. So the state is likely completing and drilling the same amount of rock with less rigs and less frac crews. But again, I'll hold that data until we have some really good numbers over the coming months. But I think that's what it'll show,
Which
should indicate that production should remain steady as well.
which regulations from like a state perspective would like getting rid of them or pausing them would sort of increase production here or just impact production overall, do you think?
Well, it's probably, Mark has a much deeper history than I do, but it's probably something that we would address through the rulemaking process. This coming summer.
Right.
I don't know, Mark, do you have any other
Referring to,
comments?
like federal regulations?
Yeah, federal regulations, yeah.
Well, the methane rule.
Yeah, I mean, I was going to put my litigation notes in here, and I didn't, but I'll try to get that in here next month. But all of the ones that the state is currently engaged in, I think, and I can get those for you, are something that I think would be a positive if they are removed, or a negative for activity levels if they are removed, or a negative for activity levels if they're put into place. Yeah.
That's it for me.
Yeah, thank you.
There's another question.
Mhm.
Are there any production shut-ins in advance of cold weather? If so, how much production is shut in and since when?
I don't have that number. Mark, do you have that number?
No, I wouldn't anticipate any.
Not yet.
Yeah,
Okay.
we haven't seen any yet. I think the rebound from October to November was expected, but I think it was when I saw the number, I was pleasantly surprised. It was back over 1.2 million barrels a day. Coming off the wildfires that occurred in October. So I haven't heard of any cold weather related shut-ins yet.
Typically in North Dakota, cold weather shut-ins only happen when something happens. I mean, they're going to do it preemptively.
An extreme, negative 50, negative. Yes.
We're not going to get there though.
We now have up North Dakota Pipeline Authority Director, Justin Kringstad.
Thanks, Bridget. Good morning, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. We'll get right into a quick production update from around the region on the crude oil side. Another slight increase on the Montana side of the plate. Up again, if you look at 2024, pretty substantial growth over there. Certainly something to keep an eye on. I know they still only have one drilling rig active. So we'll see if this starts to plateau out, if there's more growth on the horizon for that part of the play. When we look at on slide 3, the month-to-month changes, again, as noted by Nathan earlier, one thing I'll focus on is that bottom section, which is the gas oil ratio, which was down again. This is, again, something that fluctuates and ebbs and flows. I've not had time yet to really dig into the well-by-well data. We do know that in that October timeframe, with some shut-ins and curtailments due to the wildfires, we do have some history to show us that when operators do need to take actions where they're shut in wells, we'll see some pressure build up generally in certain areas, which can influence that gas oil ratio in a short term. So no changes though in the philosophy that this GOR is going to continue to trend upwards. I think this is just one of those blips along that path going forward. And then focusing on the crude oil side, on some of the movements, just some slight changes in what was happening with the month-to-month volumes, slightly down on the rail movements out of the region, slight uptick in the pipeline movements out. Again, if you look at where those prices were in the last couple of months, definitely sub 5 in that Brent WTI spread, which generally continues to favor the pipeline movements out of the region as the economics just get a little more challenged as those spreads narrow. Slide 6, that's just the history there. Again, slight downward trend. Where those volumes are going, continuing to focus on the Pacific Northwest. I was checking some numbers again this morning related to some of the questions that came earlier from Joey on some of the tariffs and impacts. We will see that Pacific Northwest does rely on some Canadian inbound flows, both by rail and some by other means. If we see retaliatory action where we see pricing dynamics discourage those Canadian volumes, there's a potential that we could see some uplift in some of these rail movements to these U.S. locations that can be met with rail movements. On slide 8, just looking at what pricing was doing. October is the latest. That pad 5 area had the highest price. Typically it's pad 1. This month it was pad 5 had the highest priced refiner acquisition cost for their crude oil. So again, that makes sense with a lot of the focus being our Bakken barrels heading that direction. It's a shorter haul. It's a one carrier haul. So I'm not anticipating any downward trends. If anything, in the coming months, we'll see what happens geopolitically. Potential upside there for those volumes. As we look at some of the nearer term pricing dynamics, that Clearbrook market still at a negative to WTI, just over $1. I added in here, I found some ICE data on Patoka Bakken barrels. That's trading as of late at a premium to WTI. Patoka, it's a smaller hub. A number of pipelines come together with Canadian volumes, Rockies volumes, as well as the Dakota Access pipeline also comes into that Patoka area. So that'll be a key one we'll keep an eye on here going forward. And then that Brent WTI spread, again, well below that $5 threshold. So unless there's some dynamics with Canadian pricing, that would be really the impetus to seeing any type of growth in those crude by rail volumes. Slide 10, that's just for reference if questions come up. No major changes on the truck and rail movements for now. We'll keep an eye on that. Again, some of those geopolitical considerations brought up earlier. Slide 12, the flaring. This is for non-confidential, and this is Bakken specific. So very encouraging news to see a 1% decrease, 96% capture on those Bakken molecules. The challenge, where we really saw the improvement was in wells flaring from connected locations. That's the biggest piece of the pie and the piece that's going to have the most meaningful impact going forward as operators continue. It's difficult to say right now if we're going to continue to be at this 4% or lower. I think long term, certainly that's everyone's objective to try and see how low that can go. But again, for the month of November, very encouraging. And then slide 13, that's just a historical reference for folks. The one thing that did happen, again, these are those month-to-month fluctuations, the number of wells getting connected to gas gathering and the new wells producing natural gas. We'll keep an eye on that, but I'm not anticipating that to be a major concern anytime soon. EIA, they have updated their oil price outlooks. They've added some duration to their forecast now here at the beginning of the year. Certainly a downward shift of what they were seeing. This came out slightly before this last week where we saw some real strong price movements. The one thing to keep an eye on here, they are forecasting sub $60 oil at that late 2026. So they certainly built a little bit of pessimism into their outlook. This will fluctuate month to month, but their view here as we enter 2025 certainly had a bit of a bearish tone overall to it. Natural gas processing, no new projects to discuss here today. And then we'll get into some of the residue gas transmission discussions. Let's fast forward to slide 19. This is our, again, monthly update on what's happening with Northern Border. Still trending around 80% market share on that system. You'll curiously, if you look at this, you'll see that really strong trend as we were approaching that 90+% and then a pullback. One of the things that gets wrapped up into that on slide 20 is what's happening with some of the ethane decisions by gas processors. You'll see in a similar time frame leaning out of that gas as it exits North Dakota. And so as gas plants that have that flexibility to pull ethane out and stick that into Y-grade or purity product pipelines, that will reduce the volume of gas that needs to be put into those residue streams. So that is one of those levers in the near term that can continue to be pulled that will influence some of those market share dynamics. Slide 21, again, we're now a couple weeks away from this non-binding open season wrapping up. Nothing really new to report. It's typical in these type of scenarios where right at the last moment, companies will really start submitting. I've had a lot of positive discussions with folks about this project, so things are still remaining very positive. And lastly, I think that was just another map in case there were questions coming up. I will comment, on this project. Again, the question that was brought up earlier about some of the oil and natural gas pricing dynamics. I think, this project has always been viewed as a very significant advancement towards reliability and security for North Dakota consumers moving that gas from Western North Dakota to Eastern North Dakota. If there are pricing implications to some geopolitical decisions, I think having another system like this providing another source of supply other than Canadian volumes coming down into that Red River Valley of North Dakota, it just really puts the exclamation point on the value of diversifying supply in Eastern North Dakota to a North Dakota-based project. So that's all I've got for prepared remarks. I'd be glad to answer any more questions.
Yeah, what's the sub 60, like how did they come to that conclusion? Like what would cause that?
Yeah, very good question. So in the room, there's a question about the EIA and how they, what's really driving their bearish outlook. I don't have the notes with me. The one thing I really like about the EIA is they're very transparent. And so in that monthly update, they will provide context for what they're seeing at a global supply and demand and some of those changes. There's another graphic that I don't include that shows
Or can you not really compare what would happen then between back?
Yeah, it'd be difficult to compare. Again, we're seeing a lot of steadier reaction from operators at a wider band of pricing maybe than we've seen in the past. So I don't have a parallel right now for you on that.
And then I guess sort of question for both of you actually is at the state legislature, what are you watching any particular bills, any particular topics, anything of importance to the DMR there?
Yeah, I'll quickly comment. So the question was, what are we watching and legislatively? Obviously, gas build out is one of the key focus with policymakers on that. Season wraps up on the transmission side, that will garner additional conversations of state potential support.
And I would just say that the team here continuously monitors bills that are coming through, and right now we have 60 different benefit related, but others could be oil and gas related. So there's 60 different ones that are on our watch list right now. So continuously monitoring that throughout the week. And then as a team, we usually cover those every Friday and then again Monday.
Yeah.
That's all for me.
Great.
Thank you.
Well, thank you, everyone.